TFNN. Headline News Update. Here's Tom O'Brien.
Hi, everyone. Basil Chapman for Tom O'Brien. It is my pleasure to give you the Everbank update, and here it is. The Dow is down 109 at 17,368. If you're looking at my charts, you'll see the one on the left is the daily, right here's the weekly, right here's the monthly, and there's the 120-minute chart. The daily shows you that it cannot yet break and close above this black line, which is the 9-period exponential moving average. So the parameters to watch today are 17,330. A close underneath that would be very negative and suggest that that wick, that very thin wick from on the 12th of August, will be tested. That went down to 17,125. I believe there should be at least a modicum of strength a little later on in the day. We'll see if this 17,350-ish area can hold. On the upside, 17,461 is that 9-period moving average. It needs to break that decisively. The weekly chart has already gone from a sell signal to a sell mode. So any of these rallies, I suspect, are going to fail. And I am suspecting there'll be a little arch formation that's made this week, an attempt to rally, and then will fail a little later in the week. Meantime, let's go to the S&P, the SPX.X, and that is right now at 2,081, down 10. And here the asymmetric triangle, or actually it's more like a symmetric triangle, is being tested. A close below 2,075 would suggest that the wick, once again, right here is going to be tested, and that low was 2,052. My suspicion is that we'll somehow try to recover a little bit, but it's most important to break above 2093, start to move into the mid-2090s, and it'll say, okay, just a momentary flutter to the upside. You can see the weekly chart is weak, not as weak as the Dow. The technicals are very weak, but the price is held, but it is under 2090, which is the 9-period exponential moving average. Let's go to the QQQ series. QQQ series is down just a little bit at 42 cents. We'll see, because at 110.10, if 109 support is broken in the next 2 days, that's very negative. I believe there should be some attempt to try to get to 110.70s. Now let's go to the dollar, the DXY. The dollar at this particular moment is up a little bit. It's up 4 cents at 96.56. It too has made an arch formation in the daily chart. Potential arch in the weekly, but it's still holding very well. I suspect that there's enough residual strength in the dollar to at least hold in the 96s for a little longer. Needs to get to the 97.30s to show that it's got strength. If you look at the Euro, EUR, USD, the Euro held the 9-period exponential moving average support, but I think that it's liable to test the 1.10 area, and the weekly chart says, yeah, it's just stuck in a trading range. Gold, this is going to be very interesting. Gold had an opportunity to rally sharply, and it took that rally. Then it held support, and it's trading at 1,119, up 7. If gold is able to break above 100, make it 1127, I would actually prefer to see a close above that in the next 3 days. This is the opportunity for gold to have a nice counter-trend rally. It's already started that counter-trend rally, but that suggests it could get to the 1130s and even the 1150s. But 1100 support has to hold. If you're looking at the TLT, which the bonds right now, the TLT is at 124.76, up 80 cents. Yep, money's coming out of stocks and going into the so-called safety of bonds. And we're looking at that right now at 124.74, up 78 cents. 9-period moving average, 123.66 support to 123.06 is going to be very important in the short term. The weekly chart is actually starting to improve technically, and that suggests that the market should pull back as the TLT rallies. So that's the update that we've got here for you. Go to the front page of TFNN for more information on the products they offer, everbank.com, and I think you will be pleasantly surprised. So thank you for being here, and we will, this is the update, the early morning update. That shows the Tom O'Brien Show. Thank you very much for being here.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.